Hello, today is Sunday, July 5th, 2026. Here is your daily signal. According to Fortune, the financial world is entering what experts call a new era, marked by Donald Trump's staggering $2.2 billion income, the rise of disruptors like Revolut, and shifting AI signals as observed by Bloomberg. Artificial intelligence is rapidly transforming global economic structures, with both established institutions and fintech startups aggressively automating financial analysis and risk management. Microsoft, Google, Amazon, and OpenAI lead the charge in AI-driven tech investments, while JP Morgan CEO Jamie Dimon recently announced a $2 billion investment to boost banking efficiency, and Goldman Sachs reported a 35% surge in profits due to AI-powered algorithms. In response to the acceleration of AI in finance, the U.S. Securities and Exchange Commission has proposed fresh regulations on algorithmic trading. These advances push automation across banking and financial services, raising concerns about job displacement, especially as efficiency gains scale. Medium-term, widespread AI could enhance market functioning, but also amplify systemic risks and regulatory headaches, potentially triggering new forms of market volatility and widening economic inequalities between AI leaders and less advanced economies. Next, onto the geopolitical tensions reshaping Europe and Eurasia. Fortune reports that Russians are dealing with unprecedented fuel shortages and rationing as President Putin presses forward with the conflict in Ukraine. Russia's ongoing war, coupled with international sanctions targeting its energy, finance, and technology sectors, continues to disrupt global trade and investment flows. Since the invasion began on February 24, 2022, internal strains in Russia, from economic contraction to growing dissent, have only intensified amid the pressures of prolonged warfare. President Putin remains at the center of Russia's military and economic strategies, while key institutions like the Russian Ministry of Finance strive to manage fiscal stability under heavy sanctions imposed by the European Union and the United States. Major companies such as Gazprom and Rosneft have been deeply affected, with many Western multinationals reducing their Russian operations. In the near term, ongoing sanctions may further isolate Russia's economy, deepening GDP contraction and fueling inflation. Instability is likely to drive an exodus of capital and skilled professionals, while energy supply chains in Europe and Asia face continuing realignment. Over the medium term, prolonged conflict threatens to erode Russia's influence in international institutions like the UN and BRICS, with profound consequences for European industrial output and energy security. Moving on, let's examine the technological shifts driven by quantum computing IPOs in Europe. TechCrunch highlights that IQM, Europe's first public quantum computing company out of Finland, made its Nasdaq debut at a valuation of $1.9 billion, even as leaders admit uncertainty about the industry's future. Since 2021, Europe has witnessed a surge in quantum IPOs, backed by strong investor and government interest, especially through initiatives like the EU's Digital Europe program and Quantum Flagship, which together have funneled over $1 billion into quantum innovation and commercialization. Quantum technologies offer exponential computational power that could disrupt sectors from cryptography to logistics and pharmaceuticals. Key players include UK-based Oxford Quantum Circuits, German startup Q.ant, and major institutional investors such as the European Investment Bank and the European Innovation Council. Notable figures like Hermann Hauser, investor in Quantum Motion, and Dr. Sebastian Luber, CTO at Q.ant, are driving development in the space. Near term, this wave of IPOs is fueling venture capital flows into deep tech startups across Germany, the UK, and France, attracting talent from traditional computing sectors. The IPO momentum may also pressure EU policymakers to revise regulatory and cybersecurity frameworks, as quantum advances introduce new risks and redefine competition in European tech. Now, onto the markets. European markets saw broad gains, with Italy's EWI up by 2.5% and Spain showing strength as well, while Netherlands declined slightly amid broader negative momentum. Germany posted an increase, with EWG up nearly 2.7%, and Belgium's EWK also advanced. France's EWQ added over 2%, with United Kingdom's EWU up about 2.7%, both reflecting positive day-over-day changes. Australia climbed nearly 2.1% and Japan's EWJ remained flat, while China large cap slipped marginally on continued weak momentum. India edged higher with India gaining 0.7% and Indonesia rose by over 1.3%. Malaysia was also positive. Chile and Hong Kong retreated modestly, with Taiwan and Saudi Arabia seeing small declines and Israel virtually unchanged. Qatar sold off by almost 0.9%. Africa's AFK lifted 1.3% and Kuwait recorded slight gains. Arab Emirates stayed flat for the day. Commodities saw a strong session, led by platinum's PPLT rallying 3% and silver's SLV jumping over 2.6%, while gold's GLD rose 2% and U.S. oil's USO climbed modestly on the day. Copper's CPER edged higher and carbon-based KRBN inched up. Natural gas ticked up, while corn and DBA agriculture slipped. Lithium dropped over 1.8% and uranium was flat as wheat managed a small gain. Among favorites, Adobe surged over 4% and Apple climbed over 4.8%, while Microsoft gained about 1.6% and Lowe's was up 2.5%. Axon rose slightly and Amazon ticked higher, but AMD fell 4.2%, Nvidia slipped about 1.4%, and ARM declined sharply. Oracle, Intel, Moo, Qualcomm, Marvell, and Baba posted losses, with JD rising just over 1%. In sectors, SP 500 was slightly lower, while healthcare surged 2.6% and finance rose 1.5%. Real estate advanced, semiconductors saw a drop over 5.5% and aerospace climbed 1.7%. Agriculture inched up, clean energy sold off sharply, and transportation was little changed. That's it for today. You can find more news and details on our website. Goodbye.